Afternoon, everybody. So, what I was to tell you that you can earn extra £300 to £500 per unit on your stock right now. Pretty a bold statement to make, given the way the market's been playing for the last year and a half or so. So, dealers have done an incredible job over the past 18 months, maximising the used car market, as it's the retail valuations, you know well, have grown substantially over the past 12 months. Dealers are making more money than they have done over the past couple of years in the last 12 months, solely in the used car market. So, Paul from Autotrader and myself have been talking for the last couple of months via a mutual customer, and we'll be trying to find a solution where you can take all the market data mixed with your DMS data and maximise the opportunity that's in there. We're trying to get the right information to the right people at the right time, so you guys aren't missing that opportunity as the market's moving, because you obviously know how quickly the market's moving as well. So, by way of an agenda, I'll give you just a very brief case study of a mutual customer that I mentioned that we've had some great success with. We've got some slides on the current market. Paul's going to take over and talk about the current market opportunity and what the best operators are doing in terms of maximising that opportunity that sits there at the moment as well. I'll take it back. I'll talk how you can make all that information actionable, because you're going to see quite a few big numbers over the next 20 minutes, 25 minutes. And then we talk about stock replenishment then as well, how you can use your own data to suggest what stock you need, and then mix with some market data as well. It's going to help you go to auction and buy your vehicles at the right price. So, case study. We have been talking to customers, so when Paul was talking at the beginning, they knew there's a market opportunity in there, but they were operating at about 95, 98% of market value on average every single week. So Paul worked with them and helped them with their pricing strategy. Again, Paul has the market data, so can, is influence them that way. And then from our perspective, then we were automating the reports. We were showing them real-time information. We were showing them their current stock and where there was gaps in their pricing. Plus, you got sales history there as well to show them where they're exiting the market, so you're taking the real selling price from your DMS versus the market value at the time. I'll get to explain that a bit more in a few minutes. But they've just had 16 straight weeks of selling above market value consistently. They have done all that whilst the market is moving quite aggressively, or very quickly, as you well know. It's 15% year on year, which you'll see in the next slide. And they achieved this without having to move their days to sell. In fact, their days to sell is still less than the industry average for the stock that they've sold. So they actually probably have scope to go up again on their pricing. But the way they've done that is having those exceptional reports being farmed out to their used car managers, and having all the insight that they need to know. So both the market information and their own DMS information fed to them on a daily basis, and they're managing by exception and taking full advantage of the market move that's happening. So just to talk to you about how quickly the market is moving, this is Autotrader's monthly report that they push out. So you can see there year on year, we'll just focus in on just petrol and diesel. If you look year on year for September, you can see that the market's up 21% on average, and then the month is gone, the market's moved up again 5%, so 26%. Even if you went back to August, you'll see that it was 17% up year on year. So you can see that 3-month trend, and the market is still moving 5% month on month, with a slight cooling that we've seen this month to date. So what I'll do is, Paul Keatley's going to talk to you from an Autotrade perspective. Paul's got all the market data, so we've got some live marketplace information to show you. We've got some stock and where there's opportunity in the market right now. As I mentioned, dealers are doing an amazing job at the moment in taking advantage of pricing and the way it is at the moment, but we've identified where you can see more opportunity and the scope to go again with your pricing. And as I mentioned, Paul's worked with AM50, top 50, so he's worked and helped them with their pricing strategy, so he knows what the best operators are doing to maximise their prices. So, Paul, I'll give it to you for a few minutes.
Yes, perfect. Thank you, Neil. Afternoon, everybody. So my background, I've worked for Autotrader 13 and a half years. Over the past 5.5 years, working with Autotrader's largest groups across the UK, just complementing their current in-house pricing strategies. And I sit down and tell every retailer I've ever worked with, I've never sold a car, I've never been your side of the desk, but the amount of retailers I'm working with now to kind of complement their current in-house strategies, with a little bit of science, a little bit of auto-trader data. And as Neil rightly mentioned then, I've spent a lot of my time over the past, I reckon now 12 months, plowing through, working with the 16 out the AM20, just work alongside these retailers, sharing auto traders data on how we can strategize. Now, one of the greatest pieces of data we can plug into any retailer business across the UK is a little metric known as retail rating. That's auto traders' version of desirability, how hot a vehicle is within a local marketplace. And this is why it's so compelling and so important out there in the market. And just to give you an idea, here's a very quick snapshot. And I can see some familiar faces in the audience, so some of you will be aware of this. But this is a metric we brought out in the marketplace a couple of years back. And this is the metric I want to talk about, retail rating, how hot that vehicle is within a 50-mile radius of a local retailer's forecourt. And that's simply scored on a scale of 1 to 100. Now, how we break that down, simply, a car buyer going to Auto Trader and searching for that exact make, model, derivative and plate, competition out there with the same exact make, model, derivative and plate live, supply versus demand. Then more importantly as well, a hint of speed of sale, how quick we've seen that vehicle turn for the marketplace over the last 28 days. And this is why it's so key. And once I'm starting to play this story back to the retailers out there in the marketplace, they're tapping into that to strategize from day one when they're out there sourcing vehicles. Let's source the right car, but then price it to marketplace right from day one to drive that kind of greater efficiency. And back to this kind of table, I've manually gone through the last 90 days worth of vehicles removed from dealer port, from Auto Trader, from the franchise marketplace. I've manually gone through about 337,000 units, and I've then bucketed them vehicles up into one of 5 buckets, which we start to talk about retail rating, that desirability metric. So working from left to right on every graph. Let's start with this graph, stock volume removed. So I've then taken all them 337,000 vehicles, dropped them into one of 5 buckets, based on retail rating. As you can see, 18% of the stock in the red column, they're the vehicles with a lower retail rating, okay? 18% of stock retail compared to the far right-hand side, 26% of the stock retail with a higher retail rating out there. Now, this is why it's so important. Those retail rating with a vehicle, them vehicles with a lower retail rating, less than 20, they're taking on average 49 days to transact. Compare that to the higher end retail rating vehicles. They're taking on average 22 days. Retailers are selling them vehicles for fun. And this with the amount of retailers I'm sitting down with from day one, they're understanding before they source that vehicle in, or once that vehicle's on their forecourt, let's strategize from day one. Let's understand, is that vehicle hot in my local marketplace? And on the back of that then, more importantly, not only are them vehicles turning quicker, they're actually transacting at a higher price point. Same story again. Look at those vehicles with a lower retail rating. We're seeing them transact circa 98.64% in the marketplace over the past 3 months. Compared to the higher retail rated items, they're transacting not only much, much quicker, but at a higher price point. And the amount of retailers I'm working with now, they're building strategies from day one. When that vehicle lands on the forecourt, let's ensure we're capitalizing on maximizing opportunity on that vehicle when it has a high retail rating. But at the same token, when it has a low retail rating, you've got to strategize. You've got to price that vehicle to marketplace before it becomes overage and costs you money and drive that risk. So to take that and look at a snapshot of, and it's really messy, okay, so bear with me, it took me a lot of time to collect this. This is looking at them 337,000 vehicles plotted into a scatter graph. These are the vehicles, again, we've seen removed from the franchise marketplace over the last 90 days. And what you can start to see here is that purple lines where we're seeing the franchise market transact 99.99% on average. But what you've got, which I need to call out, look at all these vehicles priced below the marketplace from day one. That was their first price position, their day one price point on Auto Trader. These retailers, and the amount of retailers I'm working with, there's some fantastic operators out there who do turn a lot of stock and a lot of stock quick. But retailers are still going to marketplace pricing vehicles below the market from day one, not only below where their car buyers are sat searching, between 95 circa and 105%, but way below where these retailers typically tend to transact an Auto Trader from day one, leaving clear opportunity for extra profits on the table. To take that a step further, look at that retail rating score. So let's look at all them vehicles with a higher retail rating, 60 points out of 100. These were hot items of stock. Look at that market right down here of lost opportunities that were priced under marketplace from day one. The story's so compelling. And this is why the kind of the retailers we work with now who are so efficient, they're absorbing our data to plug into their pricing strategies from day one. This is the kind of data sets they're using. Because if we just fast forward ever so slightly and start to look at this kind of, that scatter graph from an opportunity perspective, over that 3-month window, 15,465 units were priced under the marketplace from day one. So that bottom left-hand quartile of that scatter graph, they're the vehicles that were priced below marketplace from day one, leaving clear opportunity on the table. Those vehicles transacted super quick, 20 days on average, leaving potentially £27 million out there of additional profit. Fast forward and take it a step further. What was hot stock? These vehicles now had a very high retail rating, very desirable items of stock. But 6,520 units were priced below the marketplace from day one, leaving circa £8.7 million of additional profits on the table. So back to my point before, this is what not the smart retailers, but this is what retailers are starting to do now, drive greater efficiency. They're using data, they're using more data at their fingertips to make more informed decisions sooner from day one. And that's the kind of opportunity out there. And a lot of this data we're starting to work with now alongside Neil over the past couple of months. Neil and his team, the awesome team at Real World, they're calling out this opportunity to retailers at their fingertips to tap into a more frequent basis. But the opportunity is so compelling. And with the marketplace turning, we're seeing 13,496 price changes per day on Auto Trader, 19,000 cars getting added or removed on Auto Trader. The marketplace is moving far too quickly. And this is why tools that we're kind of complementing retail's pricing strategies, decisions with, they start to tap into this data to make them more informed decisions from day one. And over to you.
Yeah, cheers. Thanks, Paul. So yeah, it's pretty impressive. So you can see the opportunity that does sit there and how important it is to get the pricing right. You guys have the problem of trying to collate all this information. You got all the Auto Trader data to suck in. You got all your DMS data to take care of as well. So how can we take action from that data and get it into the right hands? So this is just an overview dashboard that we have. So this is taking all the data from Auto Trader. Top line, you just got all the general statistics, like what's the general market condition, how many vehicles have you got in stock, and how much of that is actually advertised on your different advertising platform and Auto Trader. But because we have that sales history and we have your days of sale coming from your DMS, you can accurately see then when the vehicle is sold, what was the valuation on the day that the vehicle was sold, and where is the opportunity gained or lost on the vehicles that you have sold. So if you're looking at the last 6 weeks graph there, where you have the sales difference to valuation, you can see that this example, they're under the market, they're selling at about, on average, 98% of market value. For a franchise dealer, you know, they have the scope to possibly go above market because you're often offering the bells and whistles that go with use car warranty and everything else. And if you're implementing that policy pricing, or central policy pricing, which is based on retail rate that Paul was talking about, you can overlay that policy price with this data as well. So if you're aiming to go to 102, 103% of market, and you know you're exiting at 98%, you know you got a different problem going on. Likewise, you're tracking the days to sell. So here you've got the industry days to sell for the vehicles that you have sold versus your days to sell coming from your DMS. So that's another indicator for you to know when you need to tweak your prices. So if you're starting to fall behind the market, you know you got a different issue going on, where if you're ahead of the market, you got scope to go again with your prices, which is what we have seen over the last 12 months. The second half of that dashboard is showing you the opportunity. So that's your stock as it stands right now. Excuse me. Paul mentioned the retail ratings and the buckets. We've did the very same thing. So what you're looking at is all your stock. What's the opportunity or overpricing that's going on with those retail buckets? So if you take the 40 to 60, there's 380 grand worth of vehicles that are underpriced currently in your stock. So that's something that can be tapped into. You can drill into the detail and get the list of vehicles. On the right hand side then you've got another scatter plot. They're popular now, but that's every single vehicle that's in stock. And this is where the real opportunity sits. So if you're taking even 100%, so that's the market value for the vehicles that you're currently holding in stock. They're color coded based on retail rating, but you'll see there's a bunch of green dots that are sitting in there. They're all highly rated stock, 60 or greater, that's sitting well below market value. So you need all this stuff automated and pushed out to the right people so they know what pricing is out of kilter with the pricing policy and how to take action on it. So how we do that then is, and this is probably a hard one to read from out there, but we can push out an exception report. So if you're taking, for example, you go for the low-hanging fruit, you saw the scatter plot and there's a bunch of vehicles under, even under 95%. So we can take, if you want to say, for example, give me everything that's £800 under my policy price or under the market valuation, and push that to my each individual used car manager and let them manage by exception. So rather than them have to spend, time in portal or wherever it is that they're managing the stock, or probably Excel sheets, rather than having them spend time and have to analyze all the stock, this is just the exceptions that you're managing. So you're getting the opportunity to move the price if it needs to be moved. We know that there's some, like, it's not the de facto price. This is a guideline price that you've set centrally, but you're giving that information to your used car manager to make a decision. So you know what the price is out of bed with your policy price, but you're also giving them what's the days in stock for that vehicle, so they can make a decision on that. You've also got what the retail rating for the vehicle is, and then you've got the performance rating from Auto Trader, which tells you how well that vehicle's performing against your competitors, how many images has the vehicle got, and how well it's performing online as well. So you're trying to give all the information to make a decision on what you're going to do with that price. Are you going to leave the price as it is, or are you going to move it up to the market value or the policy price that you want? So that's how we get it out to the dealerships. The second, I suppose, arm to this is stock replenishment, and how you can use your data to get you the right stock. So what we can take from our DMS is the sales history and your current stock. So from here, now this is probably too high a level because I have it at model level, but you can obviously drop it down to variant and year level as well. So if we were looking for a shopping list, we can again look at our sales history and our current stock, and we'll calculate a week's cover to know, where your shortage is. So if we're looking at Fiesta, it's suggesting that we need to get 35 to keep up with the current sales traction that we're getting. Next question for that is then, which dealer do I need to get the stock into? So we can break it up by dealership. So we got those 34 Fiestas that we need to replenish, and then you look at it by dealership. So you got the week's cover sitting here for each dealership. So we know location 13 is pretty shy on stock. They've only got 2 weeks cover, so you want to be getting stock in there as quick as possible. So then you're going to the auctions or wherever you're sourcing your vehicles from. So you need to be able to go buy with confidence. So bringing back in the market data to assist with this. So I showed you where you have sales history and current stock. But if you're bringing in your retail ratings that Paul's just gone through, and the trend on the vehicle valuations, so we can break it down to his example of a Fiesta Titanium by year. So if you're going to stock yourself up with 2020 Fiesta Titaniums, I think you'd be pretty comfortable going in and maybe going the extra, because you've got all that extra budget from maximising your retails. So when you do go to auction, you know what a sensible price to buy that vehicle is at, because you can see that trend is actually going up. Even though the retail rating is actually staying pretty steady, that valuation has increased week on week. The second part of that is you might think differently about a 2019 vehicle. So that has probably peaked and is on a slight decline over the past 6 weeks. So if you were going in with a fairly aggressive purchasing policy to go and buy these vehicles, you might not go as hard on that vehicle, because it's probably peaked and you're not going to put the extra budget towards that car. That's another element to it as well, just before I finish up, is you're not only maximising the opportunity with the market the way it is going to cool at some point, and it is going to slightly decline, which we have seen in the last 2 weeks. So having that trend information and having that snapshot of how vehicles are actually performing over a 6 weeks period, you're getting that early indicator for yourselves. So if you, and we have been buying vehicles, I suppose cost price have increased as well as the retail values. So rather than getting stung with the expensive stock, you want that indicator to know, right, the market's cooling, I need to start releasing my stock. So those indicators are there with the data that's in the background, because you have all the trend information. So to summarize the 2 elements that we just spoke about there, so when you're selling your stock, you've got opportunity there. Paul's highlighted that £22 million worth of current market value that's there to be tapped into. So you can maximise your retail values through automated exception reports, and it will increase your PPU by £300 to £500. I mean, our case study, there's evidence where that's happened. Actually, we had a call this morning where we had a very similar story with a customer as well. And then on the stock replan side, you can go buy with confidence because you got that market information to know what way vehicles are trending in terms of valuation. And then you have your group shopping list that you can pull together through your DMS data, and it's going to tell you what stock you need to fulfill into your dealerships. So with that, we'll take any questions that you might have. Someone wants to tap into that market. No? For automated pricing, we've discussed it all right. It's possible to do because you can write the information back. It depends on, I suppose, what way the dealers are handling their price updates, because I suppose some dealers are using the DMS, they're updating prices centrally, and then it's feeding out to update all the platforms in one swoop. So, that's an option that is available. We're not doing it at present, but yeah, we are talking to a couple of dealers about trying to solve that problem, that solution, because there's obviously a time saving there as well.
Sorry, how do you protect against a race to the bottom on the lower rated vehicles? Because where you're talking, I agree quite rightly, you've got to take price action on something that doesn't have such a high desirability. Yep. How do you stop that just becoming everybody chasing the price of those rated vehicles there?
It's a really good question, thank you. And you know what, it's probably one of the biggest questions I get for the past number of years presenting the data back, and it's not really a race to the bottom, it's kind of a race to the middle. Let's understand from day one what the retail rating is, which is huge. If we can understand from day one how desirable that vehicle is in our local marketplace, then let's strategize from day one to price that vehicle in line with the marketplace, not below the marketplace, not a race to the bottom, but price it right from day one, because we can price them vehicles right from day one, understanding that local marketplace, using the insight. That vehicle then is going to have the optimal chance to retail where car buyers are sat searching for that make, model, derivative plate, and also where vehicles are transacting. But it's not really a race to the bottom. It's more so let's price that vehicle. Well, it's a race to the middle. Price it right from day one.
Any other questions? I'm off. Any other questions? No? Okay. If anybody does want to come talk to us, Paul and myself are up at stand C4 there in the corner. So happy to do any individuals. We can give you a couple of demos as well of the dashboards that you're seeing there as well. And Paul has some data. So looking at your own marketplace, Paul has some market data that we can tap into, where you're operating, whether it be brand or area. We can show you what opportunities currently sitting there as well. So by all means, come over and have a chat with us afterwards if you're free. Enjoy the rest of your afternoon. So thank you very much.